Good evening and welcome to Beyond the Numbers, coming to you live on here on Joy News. We're also live on all social media handles. Today, we'll be touching on a very critical topic that is assessing the reasons why the NPP lost in the 2024 general elections. My name is Winston, Tackie, and I'm doing this with...
Well, Agyei, Kofi, and just like Winston said, we are looking at 5 economic reasons why the NPP actually lost both the presidential and parliamentary elections. It's been almost a week since, we had Ghana's 2024 presidential and parliamentary elections. And of course, you've been following the conversation here on your election headquarters. And the final, result as put out by the EC is what you see on the big wall, where the gap has been the main point of conversation. Why? The NPP lost with a big margin. That is what we are going to discuss. And you remember that in October, on Beyond the Numbers, we analyzed what we call the monetary policy rate and its relationship with how parties or incumbents actually or oppositions win elections with a very big margin. That is what we are going to discuss. And for us, the most important aspect of this year's election is what you see on your screen, economy. Why is it important? Because, Winston, if you go to the two political parties, their manifestos, just like I always say, currently this side is almost immaterial. We are all attention is on the green side.
Absolutely.
112 promises that President-elect Mahama actually made in his manifesto on the economy. Such a huge data. If you look at 112 promises on the economy, ranging from inflation to depreciation to managing of debt to energy, another key component of the economy. And if you listen to people, you'll get to understand that the economy was one of the main reasons why people actually voted. And if you put your ears on the ground, we gather intelligence and people are saying that, look, we punish the current government based on their economic sins, because people said they are not happy with the situation, they are not happy with their living condition, and that's why they decided to vote the current government out.
Even before this government came into power, that was also their cheat before they came into government. Because when you talk about economy, irrespective of where you find yourself, directly you are impacted when the policy rate is reviewed. You are impacted when the prices of commodities in the market are reviewed. You are impacted by government indecision or decision that has to do with the policy direction that target particular sector. Businesses need power, businesses need favorable working environment to thrive. All these are considered and placed as a jacket on any government to see whether they can wear it well and work in it perfectly. But it appears that was the assessment that was given to President Nana Addo before he was being led by the NPP's Dr. Bawumia, who unfortunately could not meet the target in terms of being the president of this nation subsequently.
Well, talking about, I like the way you put it, the economic jacket and how big it was. Let's start from the first indicator, which is the exchange rate situation. How big a jacket was it for President Kofi Addo when he was coming to office in 2017? How big was that jacket? Because, if you look at the trend, you will see that he was left with an exchange rate, and here we'll be focusing more on the dollar because of its universal nature, where we had about $1 is to about 4 cedis. That was the exchange rate jacket that was given to him. And just like you see at your end, this was where he left the country, almost between 15 cedis, 50 pesos, and currently even about 16 cedis, 20 pesos on the exchange rate market. This is the exchange rate jacket. He picked it at $1 to 4 cedis and left it around 16 cedis. Mahama is coming back and definitely will be looking at this tall mountain and looking at the peak and say, whoa, what have I got myself into? How do I bring this down to maybe the level that it was in 2017, 2016, or 2018? How big a challenge do you think that Mahama will face in bringing down this mammoth of a mountain?
Mahama will face a very serious challenge. One of the key conversations during his tenure then was the debt management crisis. That was where we began to see an increase in our debt structure. The conversation then was whether government would divest much money in settling CAPEX projects, that's capital-related projects, in financing infrastructure. And that was a bit confusion because whilst you're financing infrastructure, you have to also look at social policy. How are they related? You also look at economic decision that will impact the currency while connecting it to businesses as well. So in this next government that he's going to, the table has been laid. And what has been served on the table is an inflation rate of almost 16 point...
That's the exchange rate
of almost 16.4%. Although as of today, it's around 14 Ghana cedis basically. And it's still baffling due to the decision by the central bank to auction some dollars, make available to some commercial banks. Information we picked up this morning is that although the dollars are available, the banks are unable to buy them all. And that is what Joy Business picked up today. We are still observing the market to see whether some really interventions may come into play, considering the approval that the current government, which is still the NPP, which is still in power, although they've lost the election, we'll see if they go into parliament coming next week. If those monies are approved, it will be quite possible to get some injection.
Yeah, very important. I mean, if you look at the exchange rate, one group that was really affected was the business class. And going into this year's election, the main, conversation was focused on how to find solutions, Guta, whatever. I mean, they were all looking for solutions because they claimed that they had lost significant components of their trading capital, especially those who were into, import. Exactly. Now let's look at also inflation. I mean, exchange rate goes hand in hand with inflation. John Dramani Mahama, when he was leaving office, left an inflation or an average of 17.5% in 2016. Now he's coming back to his office, to that same office. 2023, the average was about 40%. This year, the target was 18%, 15%. I do not know which one they're targeting now, but definitely you will see that we will end the year with a double digit. This is also another big header, one key reasons why, the NPP lost the election in Winston. I'm
surprised that during this election, no party made mention of bringing inflation to a single digit. You've all forgotten that the previous election, that was a key conversation. That if I'm...
Because at that time it was possible. Now, it's almost impossible.
It was impossible. So it is impossible, if I should put it that way.
At the moment.
However, so where we were as of 2023 December, around 40.30% was quite high. There's been quite
an improvement,
going downwards. We've seen it currently around 23.1%, and this is something that, although the inflation figures keep coming down, the price differential are still sticking to where they are. So if you go to the market with as lesser as you have, you cannot buy as much as you expect. So prices still change subsequently. Just last week, I did mention, you go to the market, although there's a season for tomatoes, there's a season for cabbage and most of the foodstuffs, yes, still the price isn't as much as it was before because of the recent stability in the market.
Yeah, if you look at the NPP, it's actually a cocktail of output in terms of the inflation side. They are actually the kings of single-digit inflation, looking at it from 2018 to 2020. And then after COVID, we saw that everything went out of hand, went out of control, and we experienced one of the highest inflation under their government. You made mention of the debt situation. People were simply not happy with the way the debt situation was going up. And the debt situation actually has a direct linkage with the exchange rate because the finance minister then, Ken Oforiaza, made us understand that in 2022 or somewhere like that, government added about more than 90 billion Ghana cedis to its debt stock, not because it borrowed fresh loans, but it was just because of the exchange rate differentials. How is this going to be a big issue for John Dramani Mahama, looking at the fact that, look, we've done debt restructuring, but most of the debt servicing obligation will start 2025, 2026, Winston?
Sometimes some understanding that people have is that restructuring simply means we are okay. That's not the case. Restructuring just means we've only postponed our burden. We'll surely meet it that way. The leverage we have now is to ensure that we do our stuff right, to put our books in order, to put our systems and structures. And what I mean by that is to ensure that our domestic economy is having that leeway to grow. And that we've seen in the last year from first quarter to second quarter. I'm glad to witness that most of the economic sectors are growing.
I think the average around 6.5 or so.
Absolutely, 6.5. And as at this third quarter, around 7.2.
7.2, yeah.
That is quite good. But if you go down to sub-sector, the sectors that we expect to see that boost and growth that are quite sustainable, like the cocoa sector has witnessed decline consistently.
Yeah.
And that is a disturbing factor because cocoa, as of now, is selling around 10,000 on the international.
In fact, that's the backbone of the Ghanaian economy because we get about 90% or 95% of whatever we export. And so to have the cocoa sector dwindling is a big danger for the Ghanaian economy.
Absolutely. We may not be able to meet our 350,000 metric tons that we've targeted for the next cocoa season because of some fundamental. There's still indecision as to how the Cocoa Board is going to be financing the cocoa season going forward. And we are hoping that possibly...
No syndicated loan.
And that is what we are hoping it will happen. But we can now go to the market, looking at where we are now. The reviews by the Fitch that came recently assesses that there are still some issues going forward. However, the government still mentioned renegotiation. We are hoping that what will be renegotiated will go to the benefit of Ghanaians.
Definitely about debt burden, and in fact, that's the reason why possibly we cannot do cocoa syndicated loan because we've seen the interest rate on that loan, and we say, look, we cannot do this. Starting from 2025, 2026, because we know one of these burdens ahead. That is the Eurobond debt burden. Just look at it. If you do the math, the average is around $980 million of debt servicing in the commercial space alone. One of the reasons why Ghanaians actually voted out the government. And John Dramani Mahama, possibly when he was giving an update on the economy, they may as well told him about the debt burden, and they said, look, John Mahama, you have Eurobonds maturing, and we've done some restructuring for you. We've been able to get some haircuts for you, but you'll be paying 1.3 billion in 2026 and about 900 or nearly $1 billion in 2025. That is when you resume office. I mean, another key component, another reason why the government actually lost was the fiscal discipline. This data makes us understand that, until 2023, 2024, when we saw that, look, we were not cutting a quota according to our size, we definitely were always spending more than we were generating. And in fact, that was a big issue. Remember, the finance minister actually had to go to a certain committee where they questioned him about not being responsible with some of the, expenditure and plunging the government into some serious economic crisis. Definitely one of the reasons why Ghanaians actually looked at in this year's election and said, look, we are not happy with this curve, and so go for someone else to come, Winston.
I think what we must do now is value assessment for most of the government's projects. Because if you look at the amount of money, projects like YouStart is one key project that was supposed to ensure access to capital.
Where is YouStart anyway?
Basically. So if you follow up some project, you realize...
Where is Obatampa projects? I don't know where they are anyway.
These are the questions we are asking, because if projects are rippled down and you see subsequent it going into businesses, SMEs, so if you to point, apart from some key, I can't mention the brand's name, some key SMEs, who we can see their progress in the country and the number of individuals they've employed. Although there are some good SMEs that we have seen are managed by the Ghana Enterprise Agency, which have been excellent in how they manage their books. Because if you go through their records online, you realize the Ghana Enterprise Agency are really the enterprise agency. Yeah,
talking about businesses, just look at it. This is doing the ease of doing business in Ghana. This was our rank in 2000, 2008, 2012, 2016, when John Dramani Mahama was leaving, was 114. Definitely not at a very good position. Yeah. But 2020, we are around 118 out of, I don't know the number, 190 countries in the world. Definitely, that shows that doing business in Ghana, although it's currently improving, but around the COVID period, it shows that we were in very, hot waters.
The last 2 years, we've seen big giant multilateral companies moving out of the country, and that should tell you that it's not quite favorable. One of the key issues they keep mentioning is the tax system.
Yeah.
Our tax structure has become quite burdensome. And so we want you to come.
The upstream sector,
exactly.
was one of the...
And we expect you to employ more Ghanaians However, the amount of taxes we take from you is more than how much you make. So you wonder how can those businesses expand and also subsequently move in. Comparatively, local businesses are not given enough leverage. Just this afternoon, you saw the Guta complaining that a lot of international companies are taking over the retail market. And this is the reality in town. Local businesses don't have the backing of government. Unlike some countries like the US, they will make sure that those local businesses are favorable in terms of policy, in terms of infrastructure. They are given more leverage. However, that is not what is happening in the moment. So this is what is reflective of what we are seeing in the market as well.
I mean, definitely, doing business in Ghana hasn't been easy. Looking at the cost of borrowing at the moment, looking at the exchange rate situation, looking at all the other factors that we think that culminated into the NPP's big loss in 2024. Definitely, businesses were not happy with the current situation, and we saw it that, the voter apathy was really high. And for instance, one region, which is the Ashanti region, one of the key hubs of informal retail business in the country, where apathy was almost about 40%, where 40% of individuals, that's almost like the national average, decided to indirectly boycott this year's election. Tells you that people possibly were not happy or did not have confidence in the options that were available. But beyond that, we did some interesting, subtle projection going into this year's election. And in fact, we've spoken about exchange rate, we've spoken about debt, we've spoken about GDP, we've spoken about, almost inflation. But when all of these things are down, there is one master indicator that gauges the mood or the health of the economy, which is the monetary policy rate, the rate at which Bank of Ghana lends to the commercial banks. And the commercial banks will also add a certain margin and lend to the private or businesses. This for us was the main thing, right? If you want to assess the health of the Ghanaian economy, you definitely would have to look at how the monetary policy rate was borrowing. How expensive is it to get capital in the country? And we decided to track it from somewhere 1990 to 2024. And it was telling us a story. We were seeing about 4 peaks. The first peak happened around the 2000 elections. Another peak happened around the 2008 elections. Another one was the 2016 elections. And we were seeing the highest peak in 2024, we started around 2022, 2023, going into 2024. And we said that, no, this is telling an interesting story. So let's dig more and see what's the story behind these numbers and this curve. And we never saw a peak around a time where a government was maintained. All of these years were when it was changed. When we had a change in government. So we decided to go further. And Winston, you can have that analysis.
So, the funny thing, if you observe the trend in inflation, as you can see, in 2000, we were around 29% in terms of inflation. We saw
that's the monetary policy
rate. In 2008, it was around 18%. Whilst in 2016,
26%.
Around 26%. In 2024,
30%, that was the highest.
There. The issues there, we realize that then the depreciation of the CD becomes a key contest there. So during the change of government, the CD becomes a conversation. Most government always say they want to deal with inflation, and therefore they use the policy rate as a tool to ensure they are able to manage inflation. So they keep chasing the inflation, forgetting that other factors subsequently are also being hit. So you change the policy rate. So what happens? What happened in this season, that is between 2016 and 2024, is we saw inflation just after COVID rising consistently. But the government said we have to catch it.
Catch it with the monetary policy rate.
Exactly. So they kept using the policy rate. Most write-ups from the Institute of Economic Affairs have been proposing a review of the measure of the policy rate, not just for inflation target, but also ensure that other factors are considered in dealing with inflation.
Now, Wednesday, on the 8th of October, or somewhere, I think around 7th or so, we made a subtle projection that when you see these peaks, 1, 2, 3, 4, it signals a change in government. And we said that the higher the peak, the higher the margin of defeat. And prior to this, to the 2024 election, we have seen two high peaks, 2000 and 2016. And we saw that in 2000, NPP wins the election with about 56.9%, very huge. 2016, they won again with a huge 53.9% or so.
Yes.
But 2008, there was a peak, but that peak, if you compare, it was a localized peak. It was not as high as the remaining one. The election was very tight, although they won it, the gap was not that high. Then we're saying that 2024 was going to be a bit tricky. Why? Because if you look at all this period, the 2024 peak was the highest. So we decided to do a simple regression analysis to understand this. Now, if you are watching us and you are looking at the model on the screen, this Y here is the vote share that an opposition gets during these high peaks. And if you see your X, that is the monetary policy rate, the highest monetary policy rate in that period, in that 4-year period. So what we did was that we put this data, right, using the years and the data, and we computed a simple regression analysis, linear regression analysis, and this is the model we got, trying to predict how this year's election will be.
Yeah.
And if you heard us saying that the margin possibly was going to be higher, it was based on this model that we were using. Very simple model, but has a very complex story attached to it. So if you have this model, right, and we've seen that going into this year's election and in the 4-year period, the highest monetary policy rate was 30. If you put that 30 in the X space and you decide to do the math, the reason why we put NDC here is that NDC was the main opposition party. So we're trying to see what would be the percentage of NDC's win. Just look at the magic. 41.9 plus 0.5, everything in percentage, plus times that 30 will give you 56.9 with some margin of errors. So that tells you that the story we're trying to tell with the monetary policy rates was not a joke. It was real. We had some reality attached to it. Just look at it, 56.55. And we understand that we do not have results from some 9 constituencies. And some say Mohammed's percentage could go as high as 54%.
After that particular assessment that we made, people start calling us and sending us texts, not just in Ghana, across several markets.
Yeah.
I got calls from Nigeria, some from UK, asking that your numbers are very interesting. Let's wait and see. And we told them we are beyond the numbers. So just think.
Well, after waiting, this is it.
So as you can see, we're giving you up-to-date analysis of some of the key factors that businesses consider, that individuals and market consider. And when I'm talking about the market, I'm not just referring to the global market, but the domestic market, the market women who have access to basic macroeconomic indicators. And this is where we've gotten to give you up to date. One thing that I am so proud to say is that peace is very expensive. Yeah. War is very cheap. We've kept the most important price we've paid for peace by voting peacefully during this election. Let's keep and maintain that and ensure peace and harmony are all across every part of the nation while we ensure we sustain our development as a nation. We'll bring you more analysis here on Beyond the Numbers show. My name is Winston Tackie.
And my name is Kofi Agyei. It's a wrap. Enjoy the rest of our programs.